Okay. Hello, everyone. Welcome. Thanks for joining us on your lunch hour. My name is Liam Threlkill, and I'm a policy analyst and program manager here at the Utah League of Cities and Towns. Today, we have one of our local administrative advisor, or LAA, webinars that we are doing. We had one a little while ago with Gary that covered Open and Public Meetings Act and just some best practices in running a meeting. And today we are going over some budgeting basics. So if you're not familiar with the Local Administrative Advisor Program, it's a program made specifically for cities and towns of a certain population and without city managers or administrators to get some help on a local level with some of their administrative needs, and to help also just get some training and curriculum out to the staff that is there and the electeds there so that they can help to better their own communities and work in their own communities. So today, we're excited. We have Jamie Davidson, who has many years of professional experience in administration and management in Utah and is currently the Assistant Chief Administrative Officer in West Jordan. And I will turn the time over to Jamie now.
Liam, thank you, and good afternoon, everybody. I know this is kind of a snowy day, but thanks for taking time out of your schedule to talk about something that's really critical to us as municipalities here within the state of Utah, especially this time of year as we prepare ourselves for an upcoming fiscal year beginning July 1 of 2024. It seems odd to some to have a discussion in January about what is going to be happening in July, but it's always good to begin sooner rather than later as it relates to budgeting. Like Liam said, my name is Jamie Davidson. I've served for a majority of my professional career as a local government administrator here in the state of Utah, and have been in and around budgets for much of my professional life. And so I am really delighted to be here today to have a conversation with you and to talk a little bit about budgeting for small communities and towns here within the state of Utah. This is a high level perspective. This is not necessarily something where we're going to roll up our sleeves and here in the next 60 minutes get really, really deep into budgeting conversations. I think there'll be opportunities for us to have some of those conversations at a later point with other local administrative advisors here within the state. But for today, I wanted to provide you maybe a 10,000 foot level kind of perspective as it relates to budgeting. And for some of you that are new to local government administration and maybe were recently become part of the municipality or recently elected in officials, this will give you kind of an overview as to expectations as driven by specifically state law. And really what I'm talking about here and the how-to that we're going to be talking about today really relates to the Utah State Code, specifically Title 10, Chapter 5 or 6, that is identified as the Uniform Fiscal Procedures Act for Utah towns and cities. Specifically, Chapter 5 relates to Utah towns. And now we're talking about municipalities that are of populations 1,000 or fewer, or Chapter 6, which specifically notes and talks about cities within the state and classifications of cities based on populations greater than 1,000 people. So for example, you may find yourself as a third, fourth, or fifth class city, smaller jurisdictions here within the state, or a large city like Salt Lake City, designated as a class 1 city. These rules and guidelines apply to all of us as municipalities, and they really include information, specific information that relates to budgeting and financial reporting requirements that we have as local jurisdictions here within the state. I jokingly have noted here, they do not serve as suggestions. These are not things that we are encouraged to do, but rather things that we are required to do as municipalities here within the state of Utah. And there is, for example, teeth associated with these requirements. There are situations where failure to abide by these requirements will result in the state withholding state monies from each of our respective municipalities. So there is incentive on our part to comply with the Uniform Fiscal Procedures Act for Utah cities and towns. Of course, if you just go to your local web browser and you type in Utah State Code, Title 10, Chapter 5, or Chapter 6, you will find those provisions easily available for download, and you can dive deeper into those specific requirements. But before we kind of talk about some of the logistics, some of the nuts and bolts of budgeting, I wanted to maybe begin the conversation with you considering these following bullet points. Budgeting is something that specifically takes time. And so the fact that we're having this conversation in January is actually appropriate because it's not something that you can put together hastily in a matter of days or even hours. It's also something that requires collaboration. So there are specific timelines that must be met as part of a state budget or a municipal budgeting process here within the state. We're going to talk about that. At the same time, I would encourage you to make this a collaborative process. The most successful, the most effective budgets are ones that involve a collaboration and a mix of elected officials coming together in cooperation with your appointed officials, other members of staff, where you look at it as a living, breathing document that each of you can benefit from over the course of a fiscal year. Budgets are intended to be an iterative process, not something that you kind of put together. It's a one and done kind of situation, but rather something that is developed in cooperation with others. And you may have 2, 3, 10 revisions of a specific budget as you move through the budget process. Of course, the budget has to take a certain shape as identified in state law. And we're going to talk a little bit about some of that shape that's required here within the state. So you can't necessarily do your own thing, so to speak, as it relates to budgeting, but you do need to follow a specific framework. And of course, it's also something that is not set in stone. There is the full expectation that budgets will change over the course of a fiscal year. And we'll talk a little bit about how you amend a budget and how changes can be made to a budget. And finally, my hope is that you see and will see budgeting as both a short and a long-term opportunity, an opportunity to plan and to develop a blueprint for today, but also years kind of into the future. Liam, it looks like we have a question. I would, if you have specific questions, I'm more than willing and would welcome those questions throughout the course of the presentation. So I don't have specifically access to those questions, I don't think. And so I'm wondering if I could work with you in bringing them up as they come available or as they come forward.
I'd love to. And we've got one in there now if you're ready for it.
Sure.
Stephanie said, I've heard that auditors may not like to see you open and amend your budgets many times throughout the year. Is there any truth to this?
So I think the state auditor has been quite specific in his encouragement that we amend the budget before we expend dollars. If, for example, we are taking in revenues that were unanticipated, it's important that we recognize those revenues in advance of spending those revenues. So yes, I think the state auditor has encouraged us to develop a kind of a regular cadence where we amend the budget, and a lot of communities do that. For example, I've worked in communities where we will open the budget on a quarterly basis and recognize changes in the budget on a quarterly basis so that we try and keep up with the spirit of what the state auditor is suggesting and asking us to do. Again, with the idea that it's a living, breathing document. There have been cities in the past who have, for example, chosen, well, we're not going to make any sort of amendments to a budget until the end of a fiscal year. However, they're going to act like they are in the process, or they're spending money that they've taken in, and they are recognizing revenues, but they're not doing it in a formal way, in a formal amendment process. And I think that's where cities sometimes find themselves in a hard spot, where they're not moving through the formal steps of recognizing both revenues and recognizing expenditures that have taken place during the course of the year. Does that answer your question, Stephanie? Well, let's move on, and we'll come back to Stephanie if she has any additional concerns or things that are kind of as a follow-up to the question at hand. Maybe just a little bit of a conversation about the structure of a budget. Government and government accounting is different than accounting in the private sector. In the public sector, and specifically in municipalities, we use what is called fund accounting. So we actually create a series of segregated funds to account for and to keep track of a lot of dollars that we have that come in and out of a municipality. Some of that we do for convenience. Some of that we do because of legislative requirements or regulations that essentially require us to separate utility funds and utility revenue from the general revenue that we use to operate the day-to-day city, things like public safety services, parks, and building inspections, those kind of activities. So we will segregate and divide up our budget into specific categories. And on the left side of your screen, what you will see is some of that division taking place, where we have created what we call government, proprietary, and fiduciary funds. Now, we also, and this is maybe diving a little deeper into government accounting than maybe we need to, but we also use what is called modified accrual accounting. So we actually will plan for revenue that we will receive in the course of a fiscal year, and we will spend that revenue in the same fiscal year. So we will start a budget process, for example, on July 1, and we recognize that in November, for example, we will receive property tax revenues from our local county jurisdiction. But we are accounting for them in July because we expect and understand them to be earned come November. So they become measurable. And once they become measurable and it's something that we can anticipate on receiving, then we at the same time can also plan on spending those dollars within that same fiscal year. So it's not necessary for us, for example, to receive all of the property tax information before we, all of the property tax before we have the opportunity to spend it. I noted that there are three types of government funds and governmental accounting. The first one is what we call governmental funds. These are funds that are used in the general operation of the city, and what is included in those funds are primarily tax dollars that are collected. Property taxes, sales taxes, franchise fees, and the like. Those are funds and revenue sources that are included in general government operations. Proprietary funds are a little different. They are funds that relate to essentially business type activities that are financed through fees and charges for service. If you run a water utility, if you have a storm drain utility or a sewer utility, customers pay for those services based on level of use, and those dollars are then collected into what we call proprietary funds and are managed independent from the funds that we use to fund, let's say, police and fire operations. And then we also finally have what we call fiduciary funds, which are trust or agency funds. These are funds that we have to keep separate to some degree, like an escrow, where they're designated for a specific purpose, and we cannot allow those funds to be used in other pieces of our municipal operations. Every city, per state law, is required to designate a budget officer within their jurisdiction. Now, for towns, the code specifically says that that requirement can be filled by the mayor. But in larger cities, more often than not, you are, as a mayor and city council, designating a budget officer, generally a member of your staff, and he or she is going to be the one who is responsible for the budget. They will make the revenue estimates that are necessary as part of any budget. They will be the ones that will document and take into consideration and account for the funds that are expended over the course of a fiscal year. They are also the ones who will work and essentially recommend to you a property tax rate. And state law suggests that the requirement is that a budget officer calculate the lowest rate of property tax levy that will raise the required amount of revenue necessary for the community. So they will be the ones who come to you and suggest, hey, this is the level of property tax that we need to assess in the community to meet all of our obligations, above and beyond some of the other fees and charges that are collected within the city. There are requirements as well as to what kind of accounts you need or funds you need to set up when preparing a fiscal budget. We mentioned government funds, proprietary funds, and the other funds. Within the governmental funds, probably the most exercised of all funds is what we call the general fund. And most government activities are financed and recorded in this fund. So like I said, these are the funds that pay for your police and your fire services. They will pay for parks. They will pay for building inspections. You may have a library that is included in your general fund. You will have public works operations, the day-to-day operations of managing your roads may be included within the general fund. There are also specific special revenue funds within governmental funds that you can set up, and we are required to set up by law within the state of Utah. You may ask, well, what's the difference between the general fund and a special revenue fund? A special revenue fund is one where the revenue that is collected is to be used for a specific purpose. For example, transportation. And we need to account for those funds separately from all of our other governmental operations. So in recent years, for example, many communities have been the beneficiaries of a transportation sales tax, and there are specific requirements that are tied to that transportation sales tax. That is something that could be and would be managed in a special revenue fund where those transportation dollars are isolated from all of the other dollars within your general governmental funds and are used exclusively for transportation purposes. We also have a requirement to have and to create a debt service fund. This is the fund that will be used if you have any debt obligations. That will be the fund where you will make all principal and interest payments on associated debt through that fund. And finally, a capital improvement fund. Capital improvement funds are essentially a fund set aside to pay for capital projects and large capital assets that you, as a city, are planning to build or in the process of setting aside dollars for. More often than not, these are one-time dollars that are tied to a specific project, and you want to find a place to safely keep those revenues, to keep those dollars in a fund so that they don't get, whether it's mistakenly or deliberately, siphoned away and used for day-to-day operational purposes. The proprietary funds that I've talked with you about, those are the specific enterprise funds that relate to the establishment of the city or the municipality's business enterprises, like I talked about, water, sewer, storm drain. All of these services are ones that are based on the collection of fees for service. So you have a water utility, you assess a water rate based on the amount of water that a customer uses. He or she remits payment for that use to the municipality. It is managed through a proprietary fund. And then, like I said, other funds may be established at your discretion, not necessary, but at your discretion. One of these is you may, for example, want to establish a trust fund to collect money or to essentially house money that has been set aside for a specific purpose. A series of donations, for example, have been made to the city for a particular project that you are looking to build in the future. Wanting to ensure that those monies stay in safekeeping, you would establish a trust fund and allow those funds to remain in that trust fund until they are ready for use on that particular project that you're interested in completing. So now we get down to the budget process and really two stages of budgeting here within municipalities within the state. What we are in and what we will do first and foremost is move through a tentative budget process. And that serves as kind of the starting point for a fiscal budget. Many communities right now are starting to have conversations about next year's budget, and they are doing it in the framework of putting together a tentative budget, a budget that will be prepared and presented to the municipality's governing body here in the next few months. And they will include all of the funds that I have been talking about, but they don't necessarily need to include all of the detail associated with the budget. It is simply an opportunity to shape the budget for cities into the next fiscal year. So some of what needs to be included in that budget would be estimated revenues and expenditures. We're not talking about assets or liabilities. We're talking about an estimate of, for example, how much sales tax do you anticipate receiving in the upcoming fiscal year? What about property tax revenues? What about some of your telecommunication revenues? So all of those revenues you need to document, and then you need to identify as well where you plan to spend those dollars. And we'll have a conversation about that as well. Just a word of caution, in the state of Utah, each fund must balance, which essentially means that your revenues need to match or equal your expenditures. If you don't have that circumstance and you have a budget that is out of balance, then it's necessary, for example, if you are planning to spend more money than you are collecting in a given fiscal year, then it's necessary for you to fill that gap. And oftentimes that gap is filled by a specific jurisdiction using what they call their fund balance or their rainy day fund to bolster and to supplement those expenditures. So like I said, in Utah, we have a requirement to provide what we call a balanced budget. So revenues need to equal expenditures. The next stage of the budget process is the presentation of a proposed and final adopted budget. So you have gone through this iterative process as staff in cooperation with your superintendents and some of the other leaders within your community, and you've identified your revenues and your expenditures, and you have also identified specific areas where you're going to spend that money on personnel, on employee benefits, on equipment, on postage, on electric utility costs, i.e. the cost of power and water for your respective buildings, so on and so forth. All of those things would be enumerated and identified in a budget that would ultimately be presented to the city's governing body at time specific, and we're going to talk about that here in a minute. That presentation of a proposed and final adopted budget is something that is required. A public hearing is required as part of that and in adopting a final budget. So you would present a proposed budget to the governing body. They would then have time to review the budget and to make changes as they deem appropriately, and then ultimately to adopt that budget. And once they adopt that budget, then that document becomes your blueprint for the next fiscal period, the next year of your operations. I've also included down here below that the adopted final budget must be submitted to the Office of the State Auditor within 30 days of adoption. So there is an accountability responsibility that we have, not just to our constituents in our respective municipalities, but we also have the responsibility to provide a copy of this adopted budget to the state auditor. And so we meet that obligation to the state in a timely manner after we have adopted the budget. Right, what you see here is the specific format by which we would submit the budget to the Office of the State Auditor. And what you will see here is revenues and expenditures. If you look at the chart to the right, that they are identified with a reasonable description that includes a title and classification. So by, for example, a reasonable description, we're looking at the division or the identification of taxes in a very specific way. So we have general property taxes. We have prior year's taxes that are delinquent but have been collected. There are general sales and use taxes. There are franchise taxes. There are transient room taxes. So you see that there is a reasonable effort made to break down those revenues in a way that they are easily discernible and understandable to the state auditor. The state auditor, and we are required to do the same thing for our expenditures. Now, the state auditor has provided municipalities with a uniform chart of accounts, kind of a standard framework that we can use in the course of our budgeting efforts. It's not necessary that we use that standard or that uniform chart of accounts, but what is required of us is that we map whatever kind of description we give to our revenues and our expenditures, that we map them to appropriate or like categories within the state auditor's budget reporting system. So more often than not, it's actually very helpful to use the state auditor's uniform chart of accounts, because there is direct correlation between what is in your budget as a municipality and what you will be required to present to the state auditor once you have adopted a budget. In addition to that, and this is good information to know and good information to use as a management tool as you prepare budgets, you want to include not just plans for where you are going in terms of what a budget amounts you have for the upcoming or the next fiscal year, but it's good and required that you provide a column of your most recently completed year. So in this case, we're operating in fiscal year 2023. So the most recent completed year for us as a municipality would be fiscal year 2022. And then a column for estimated amounts for the current year end, the current year end being, or excuse me, we're 2023 is past year. The current year is 2024, ending June 30th of 2024. and the upcoming fiscal year would be fiscal year 2025. So there's an opportunity to see actual outcomes in 23, estimated outcomes in 24, and what you plan to spend and collect in 25. Those chart of accounts and all the budget forms I'm talking about are available for download on the Office of the State Auditor website at resources.auditor.utah.gov. So let's just talk a little bit about timelines. I've told you of the need to have a tentative budget and then a final budget. There are specific timelines per state law where that information needs to be prepared and presented to each municipality's governing body. It's a little different for towns as it is for cities. So on this chart, you can see the responsibility that cities have and towns have to present the tentative budget to the governing body on the first scheduled meeting in May. Now, cities can do things a little differently, and I haven't gotten into it. Cities can actually adopt a biennial budget, meaning a budget that spans across 24 months instead of 12 months. It's not something that's encouraged, but they do have that flexibility. Towns, on the other hand, have a responsibility to prepare a budget on an annual basis. So regardless of whether you are a city or a town, if you are preparing your budgets on an annual basis, which we would encourage you to do, then you are required to present that tentative budget to the municipality's governing board body on the first scheduled meeting in May. So if you, for example, hold your meetings on the second and fourth Tuesdays of every month, then during the month of May, you would be expected during the first meeting that you hold in May, that second Tuesday, for example, to present a tentative budget to the governing body. You also need to make the tentative budget available to the public. In the case of towns, it suggests promptly. In the case of cities, it says at least 10 days prior to the adoption of a final budget. So you need to make the budget readily available for public review as part of this budget process. There's also a require for you with a final adopted budget, you need to hold a public hearing to allow your constituents, our constituents, an opportunity to speak to the budget and to speak to the document that has been prepared as the plan for next fiscal year. That notice requirement for cities is at least 7 days prior to the hearing that is being scheduled. It's also the same for the town. Now, you can make adjustments to a tentative budget all the way up to June 30th of a fiscal year. But you have, and there is an expectation that you will adopt a final budget by June 30th of each year. And then finally, you have to, like I noted, make that final adopted budget available for review, and you need to send it to the state auditor. Now, in terms of requirements for posting of those public hearings that were identified above, those requirements are the same for cities and for municipalities. There is a responsibility that you post at least 7 days before the hearing takes place in 3 public places, on the Utah Public Notice website and on an entity's website homepage until the hearing takes place. Now, I will qualify what I've just shared with you and say, this is the standard process that is followed in the event you are not proposing a property tax increase within your respective municipality. If there is a need and you are planning to recommend and plan for a property tax increase within your municipality, there is a separate process that is followed as part of what we call truth in taxation. And that truth in taxation process is something that we will talk about during a different webinar, but I wanted to put it out there to just qualify and make you aware that the timeline looks a little different if you are planning a property tax increase. If you're putting forward a budget that doesn't have a property tax increase, then you need to comply with the June 30th deadline. Liam, it looks like we have a question.
We do indeed. We have a couple here. Mayor Fippen just said example of public places. So what's an example of public places?
Public library, for example, or your city hall. If you have a pavilion within a city park, for example, oftentimes they include notice boards. Those are all appropriate places for public notices. You may also, if you have a fire station or you have other public venues in your community, those are all places where you could comply with that posting requirement.
Awesome. And then there's one more in here, and I apologize. It says from anonymous attendee, so I'm not sure who it's from, but it says, I realize that budgets must be balanced. If depreciation brings an enterprise fund out of balance, does the auditor look at that unfavorably?
That's a question, Liam. Can we, if the individual who asked that question can forward your contact information to Liam, I'd be happy to get back to that individual about that particular question. That's a pretty detailed question that I'm honestly not sure I can provide a good answer for without doing a little bit of research.
Great. Awesome. And that's what we have right now.
Okay. So beyond the timelines, let's talk about kind of revenues and expenditures. We talked about the requirement we have to note on a budget specific types of revenues. I've provided here some general revenues that are probably going to be part of your general fund budget on a year-to-year basis. Three primary types of revenues that I'm sure every town, every city is going to have are property taxes, sales taxes, and fees, charges for services, licensing, permit charges, development application fees. All of those are going to be revenues that you probably in detail should identify in your annual budget. Other revenues, this is not a finite list. Some may apply, some may not apply. For example, if you operate a cemetery within your respective jurisdiction, then you are going to collect cemetery fees. If you do not run a cemetery, then obviously those are not going to be revenues you're going to recognize. Justice court is the same thing. If you operate a justice court within your jurisdiction, there will be obviously an opportunity to recognize justice court fines as one of the revenues you will collect in the city. If not, then you obviously will not have that expectation to report. There are some of these revenues that are ongoing revenues that will be collected year over year with a great amount of surety, property taxes and sales taxes, for example. But there are other revenue types that may come every once in a while. Grants, for example, or a specific reimbursement relationship that you have with an entity outside of your jurisdiction. Those may be kind of one-off type situations. And so some of the revenues that we talk about will be ongoing. Some of them will be one-time sources of revenue. On the expenditure side of things, again, this is not a finite list, but more often than not, the greatest line item within a budget is the cost of your personnel. So the staff that you need to run the day-to-day operations of a police department or a parks department or a public works team, all of those personnel costs are going to need to be recognized within the general fund. And then, of course, the associated materials and supplies necessary for those employees to do their respective jobs are also things that will be included in a general fund budget. You may have information technology charges. You may have election and public noticing costs. There are records management costs. There are credit card charges that need to be paid if you as a jurisdiction include and allow credit card use for payment of services within the city, so on and so forth. All of those expenditures are considered necessary to be documented within the general fund. And of course, if you go back to the state auditor's chart of accounts, there is an exhaustive kind of listing of all the revenue types and the expenditure types that you would pretty much see in any municipal budget here in the state of Utah. Now, as a note, we talked a little bit about revenue and expenditures and the need that we have to balance those here within the state of Utah. There is kind of one additional requirement that we have as it relates to balancing those revenues and expenditures, and that is a requirement that we have to maintain what we call a minimum fund balance. So we actually do need, by law, to have some sort of fund balance or rainy day fund available within our general fund operations and other operations within the city. Now, in other funds, we're going to talk about this in a few minutes, there's not a specific requirement as to what to have within the funds, but within the general fund, it is equal to 5% of a total current year revenue of the fund. So if you plan on collecting, for example, $1 within your general fund, then there is an expectation that you will set aside 5% of that revenue as part of the fund balance or your rainy day fund. So you cannot spend every penny that you have in the general fund every year. There's a requirement to keep a little cushion for rainy day emergencies or any sort of unanticipated expenditures and costs that may result in the future. Local governments, we call this really kind of it's our fund balance. Some people refer to it in the private sector as retained earnings. And really, this is money set aside, like I said, to cover unanticipated things that will come to pass within a given fiscal year. One of the things that probably resulted in some of you potentially having conversations about using some of those rainy day dollars that you've had in your budgets in the past was the recent COVID-19 pandemic. And for a time, there was great concern that estimated revenues that a city or a town anticipated to collect would not be available based on a drop, for example, in consumer spending and the collection of sales taxes. And then there was a question as to how money would be collected in the future, how you would pay for expenditures in the future. Those kind of things could be and probably were offset by some of you by retained earnings or use of the fund balance. I've included a chart here for some cities. For cities, they have a specific requirement for a 5% minimum of that fund balance. In cities, they also have a 35% cap on what can and what they can retain as part of their fund balance. Now, for towns, it's a little different. You have the opportunity to keep and retain in fund balance 100% of your municipality's general fund revenue. So it's a little different for towns as it is for cities. Most communities are going to try to strive closer to that 35% mark than stay at the 5% mark. But there are good reasons why, for example, a community is wise not always to keep that full 35% in their general fund balance. It doesn't make sense if you have pressing critical needs within your city to not address those needs and use that fund balance rather than keep it into, for example, your rainy day account, so to speak. Every community is required also to have a capital project or a capital improvement fund. A capital improvement fund, like I noted earlier in our conversation, is really a fund where we set aside dollars for crucial long-term infrastructure and asset investment. So if you are, for example, looking to build a road or a bridge or a park in the future, you would essentially use a capital improvement fund to serve as the depository for monies that in the future will allow you to build these large infrastructure projects or capital assets. And really, it's a matter of financial planning, where sometimes you're going to need and want to build a project on a pay-as-you-go basis, and you need a spot to put those dollars and to keep those dollars from essentially being taken and used for day-to-day operational purposes. The capital improvement fund is a perfect place to house and to deposit those dollars for use when the project is ready to be built. Now, every community has different needs. There is not, for example, a requirement for one community to have the same type of projects and the same type of needs being met in their capital improvement fund that is met and being met by a neighboring municipality. It is custom and catered to each respective community. I'll just note here that there is a requirement within a capital improvement fund to make specific note of capital projects and to essentially, if you are going to finance one of these large infrastructure or large asset projects with the use of bonds or grants or any sort of interfund transfer, then you need to keep a specific accounting of that project within the capital improvement fund. So oftentimes we kind of use the term capital improvement and capital projects. Oh, they're one and the same. Well, yes, they are used for similar things. The capital improvement fund is the overarching fund that you essentially house projects in, if that makes sense. So as we kind of wind down our conversation today, you may be saying, well, yeah, but I planned for something in July, and now I need to make a change because my needs have changed from July. We're now in November or December, and some of the needs that I had in July are different than what I have in December. Am I locked into a budget that was made in July? Can I change it in December? The answer is yes. You can transfer available budget dollars within a department. So provided that you have the approval of your organization's budget officer, you can transfer, for example, monies from an equipment line item to monies that you need for postage, provided that it is in the same department within a budget. Now, at the end of a fiscal year within that department, you need to make sure that all things still balance. There's still that requirement. But in the event you need to take from one fund to give to another fund, or one line item to give to another line item, and at the end of a fiscal year, that department budget still balances, there's no problem. But what about if you need to transfer available budget dollars between departments? So you need to transfer money from the police department to the fire department. Can you do that? The answer is yes, you can do that under the direction of the budget officer and by resolution, by approval of the governing body. You can transfer unencumbered or unexpended dollars from one fund, one department in a fund to another department within the same fund. So it has to be money that is approved by resolution by the city council, and it has to be money that has not been already spent or already encumbered for a specific purpose. What about transferring available budget dollars in an enterprise fund to another fund? This is something that many municipalities engage in on an annual basis. It's appropriate under state law, provided that certain requirements are met. So you can transfer money, for example, out of the water fund, out of your water fund into the general fund for purposes other than water, provided that you meet certain requirements. And I've identified those requirements here on this slide. The first one being you need to provide a detailed notice of what the transfer is and the intent of how you intend to use that dollar, those dollars. In addition, you have to provide a notice
Looks like we maybe lost Jamie for a second. We'll see if we can get him back here. Okay, well, oh, here he's coming back. Hello again, Jamie.
I'm sorry, I don't know what happened.
That's okay.
Are we still on?
We're here. We're still on.
Okay. We were talking about transferring from one enterprise fund to another fund. We were talking about the need to notice and advise your customers, your constituents of that change. But also, after the fact that it's taken place, you also need to provide written notice to your customers of the fact that you've made that transfer. And finally, you need to notify the state auditor with details of the adopted budget transfer. So there is an opportunity for you to make those transfers provided specific steps are met. Well, let's just talk about, okay, but is there an opportunity for us to make and increase appropriations for operating and capital budgets on an annual basis? This kind of goes back to the first question that we had, and the answer is yes. You can through a budget amendment process, and that budget amendment process follows a specific, I guess you could say, a specific process that involves a hearing, a public hearing that is required, and a noticing requirement that is 7 days before the date of the hearing. And then you can make those changes. Like I said, a lot of communities will get into a regular cadence where they make those changes, whether it be once a month or, for example, in the case of the community that I work for, once a quarter. Once a quarter is not so cumbersome, where you always are, for example, planning on a budget amendment and having to notice a budget amendment and having to prepare for a budget amendment. And so for our community, that works better. You may only have a limited number of changes, and as a result, maybe you schedule it twice a year instead of 4 times a year. A couple of other things, just a couple of other cautions here. The state auditor has encouraged us to be mindful of that cadence and to make a good effort to actually appropriate the money before we spend the money. And that's why the suggestion of regular budget amendment hearings is a good idea. So that's kind of what I had. I know we had an hour. I've taken a good amount of that hour. I don't know if there are specific questions that you have for me. I'm more than happy to answer them and have a conversation, whether it be here online or offline. I've included my phone number as well as my email. You're more than welcome to contact me. I'm more than happy to sit down with you and to have a conversation about maybe a unique circumstance that you have in your community. I would anticipate in future local advisor webinars, we're going to have some more detailed conversations about, for example, revenues, expenditures, the truth in taxation process. Some of these questions relate to budgets, but like I said, today was kind of this overarching perspective and discussion. And I appreciate your attendance today. And I will turn the time back to Liam if there's no questions.
Awesome. Jamie, that was great. So, we got a few in the Q&A that just were saying they were appreciative of your presentation and are looking forward to seeing the recording and going through your slides. So that was really great. And yeah, Jamie hit the nail on the head there. We have some deeper dives coming up on truth in taxation and property taxes, sales taxes, and other revenue streams and fees. So look out for those. Those will be coming in February and March. Let's hit this one before we get off, Jamie, if that's okay with you.
Sure.
Stephanie had a question here. She said, can you reimburse salaries slash wages expense account? We receive a check that is to help offset the wages of our EMTs. We get checks from the county to help with EMT transports. Do these checks have to be receipted to a revenue account, or can they be receipted to the expense account?
So they would be first recognized as revenue within the city. So you would go through, for example, the budget. Now you can, my bet is, Stephanie, that based on what you're sharing, that this is a routine that is followed or has been followed over the course of a fiscal year. And so perhaps with some level of accuracy, you can predict what some of these checks are going, the amounts that they're going to be. So you could include that in your fiscal budget, and you could then accept that revenue and already have essentially found a spot to spend that revenue within those expense accounts, or you can do it through the budget amendment process. So you have the flexibility to either budget for it and account for it at the beginning and at the initial budget process, or you can do it by way of a budget amendment if it's something that's unique or new, and you can recognize it in the course of a fiscal year as well. But yes, you do need to recognize the revenue, and then you can appropriate the money that has been recognized as revenue as part of an expenditure within, for example, in this case, the fire department.
Great information. Thanks again, Jamie. We're at 1 o'clock. So we will end it there. Thanks again. Hopefully this worked well for everyone. We appreciate you being here. Local Administrative Advisor Program. If you have any questions about that program, or if your community qualifies, please reach out to me and let me know. My email is in the chat, and you can also find my contact information on our website. And thanks again, and we'll see you next time. Thanks, Jamie.
Thanks, everybody.